I'm going to show you how you can get the highest possible APR on Chainlink's Link token using liquidity pools. So the Chainlink Link token has a over $7 billion market cap, and in the past 1 year it is up from $7 all the way to $11.50. So that is great to see. And in the past month it is up as well. Past 3 months it's down a bit, but in the past year it is green, which is great. From CoinGecko, you can click on their website and see the actual Chain.link website. They have use cases for a variety of things, such as asset tokenization, financial services, DeFi, gaming, NFT collections, and more. So let's see what their use case is for financial services real quick. So it says Chainlink is the gateway to on-chain finance. Forward-thinking banks and financial services companies are increasingly moving operations on-chain to increase liquidity, better manage risk, and reduce cost via automated workflows. So this is pretty cool. Chainlink Web3 services enable high-integrity, transparent markets and asset classes that are currently liquid, and these new markets can unlock new revenue opportunities for financial service providers. And by tapping into Chainlink's enterprise-grade infrastructure and adding programmable logic, financial service providers can automate a vast array of workflows to unlock significant cost efficiencies and reduce settlement times. And of course, you can scroll through the website and learn more about this Chainlink token, but I'm here to show you how you can get the highest possible APR with it. So first thing you want to do is head over to metrics.finance. This is a great liquidity pool software, and go ahead and hit launch app right here. If you're excited for me to show you how to get these high APRs, make sure to subscribe and click the bell to turn on post notifications, as I post videos like this all the time. So now we're going to want to go over to the discover section right here, and for exchange I'm going to select all network, and then I'm going to go to this little filter tab right here, pool. And of course we're working with the Link token. So for include, I'm going to type in Link, and now we have 13 pools to sort through. And real quick, on Metrics Finance, it's basically a software where you can type in filters and see a list of all the liquidity pools out there. Real quick, if you don't already know what Metrics Finance is, it's a great software where you can search a ton of liquidity pools and you can narrow them down by filters. And the best part about it is you can simulate your potential returns and start building out your portfolio. So we have a bunch of options. This ETH to Link over on Uniswap is doing about 18% fees APR. Now keep in mind, this fees APR can change. If you go ahead and actually simulate the position and tighten the range, it can go up. So don't think that if it says 18% APR right here, that's final, that's what you're gonna get. That is just an estimate using these set ranges in the software, and we can change the ranges ourselves. So first, let's take a look at this wrapped ETH to Link position, and you can see it has a TVL of 54 million. That's a great sign for me. It also has a lot of fees, so a lot of trading volume, and the volume is at 3.4 million, and the 24-hour volume for the TVL is at 6.27%. So I'm gonna go ahead and go to simulate on the right, open it in a new tab, and we can basically simulate our position. So first of all, I'm gonna use the set deposit amount of $10,000. Say that's how much I wanted to invest into this pool. Scrolling down, we can see the liquidity distribution, the correlation. Keep in mind, many of these features I'm using on Metrics Finance are free, but some of the great features are on their paid plan. So let's take a look at the volume. It stayed pretty consistent. It looks like it's going down a bit, but let's zoom out a bit. We're looking at a 30-day calculation range. So for this volume chart, we're only looking at the last 30 days. So say we were to zoom out to like 50 days. Okay, it's a bit more consistent. We had some big volume spikes in the middle. What about 65 days? Yeah, overall it's pretty consistent. I'm gonna go with a 15-day calculation range because I want my simulated return to be as accurate as possible for the current market conditions. So the volume is going down right here, but it's not something that I personally would worry about. And now let's change our ranges. If we were to set our max price to about 245 and our min price to, let's say, 202 here, pretty tight range. I'm going to zoom out on the calculation range. Okay, this is a pretty solid range. Let me go back to 15 days. We're looking at about a 36.22% APR. 36% is not bad. And with a $10,000 investment, it's estimated you could make $3,622 a year. And this is great because if you were just holding these assets, you would not be getting over $3,000 a year in APR from a $10,000 investment. Remember, there are associated risks with DeFi investing and getting in these liquidity pools. So do your own research. In no way am I a financial advisor. I'm not telling you what you should or shouldn't do with your money. I'm just telling you my opinion on these pools. And also, if you want to squeeze out the APR a bit more, you can drag that min price down a bit and the max price a bit. And look, we're getting 43% APR now. So that's over 40% APR. But keep in mind that this position you might have to do some rebalancing with. if your pool goes out of range, but you could get lucky and stay in range and milk that 43% APR. Let's go back to discovering more pools. So I do see another wrapped ETH to link position at 24%. I also see a USDC to link at 31%. Let's take a look at this. I'm going to go ahead and open it up in a new tab. But first, we can see that this pool has a over $1 million TVL. It's 1.63 mil. And even though it's less than this 54 million by a lot, it's still great. I like to say that anything over $1 million is solid for me. The 24-hour fees are lower. This one is $204 and this one is $10,000, but this could still be a possibility. So let's check it out. Let's set our deposit amount to $10,000 again. And look, without changing any settings, we're already getting a 30% APR. So this, let's check out the volume. Okay, it's pretty stable again, pretty similar. And look, this is not correlated at all pretty much. It has a 1% correlation rate. Keep that in mind. So let's change our calculation range. First, I'm going to check out the volume in the last like 50 days or so. Let's check it out. All right, pretty consistent, pretty consistent. Wow, back in August, we had some huge volume spikes. That's big. Again, I'm going to look at about 15-day calculation range when I'm simulating my returns. Okay, so now it says, yeah, 29% APR based on a 15-day calculation range. But I have not changed my range, so I'm going to change this max price to about 0.1 and the min price, let's go to about around here, 0.07. Now we're getting about 50% APR. And of course, we could bring our range a bit tighter. We're getting 52% APR here, but you may need to do some rebalancing as you get your range tighter. So at this 52.53% APR, let's zoom out on the calculation range. Yeah, it's pretty tight, so I'd probably want to go a bit wider. Let's go back to 15 days, especially down here. Yeah, we're looking at about 50% APR. That's pretty awesome. So with $10,000, you'd be looking at an extra almost $5,000 a year, $4,876. And in this current scenario, you'd be holding more USDC. You can see a 51% USDC and 48% link, and depending what asset you're more bullish on, you can change how much of each asset you're holding. So if I move the max price this way, you can see I'm holding more USDC. If I go back, and then if I move the min price this way, you can see I'm holding more link. But this pool is looking solid. I'm getting about 50% APR with this pool. And so if I wanted to do this pool and then the last pool I was looking at, I could be getting some very great returns for my portfolio. And then also we can take a look at this link to USDC.E position. It says it's doing 50% APR. Let's go ahead and open this up. It does have a $1.58 million TVL. The fees in the past 24 hours average out at about $172. So this is a bridged version of USDC over on Avalanche. That's why it's USDC.E. And of course, you should always do your own research and due diligence before taking on exposure to any assets whatsoever. So for this pool right here, look, we have our max and min price pretty far, and it already says 50% APR. I'm also going to change our deposit value to $10,000 to keep it aligned with the other opportunities we were looking at. Let's change our calculation range to 15 days. All right, the APR dropped by like 5%, but our ranges can definitely be changed. So let's change our max price to about 12 and then our min price to about 9. We're already looking at 73% APR. Wow. So far, this has been our highest APR opportunity. Now keep in mind, of course, you have to do your own research into these assets, but I'm showing you the simulated returns from Metrics Finance. And the great thing about watching my channel is that if you click the link in the description, you get access to a free 30-day trial of Metrics Pro. Usually the free trial is only a couple days, so click the link in the description down below and sign up today. So if this link in USDC.E position is something you want to take on exposure to, you can go ahead and save it to your portfolio and check it out in the build section. And if you didn't already, make sure to subscribe and click the bell to turn on post notifications. I can't wait to keep you guys informed about my latest opinions on cryptocurrency, and I'll see you in the next one. Take care.